Performance across the America reflects a widespread downturn as major indices struggled under selling pressures. In the United States, all major benchmarks closed lower. The Dow Jones Industrial Average fell 129.41 points, a 0.30% decrease, while the S&P 500 shed 21.34%, declining by 0.36%. The Nasdaq, heavily reliant on the technology sector, posted the steepest loss, down 96.52 points, of 0.50% decrease. Small cap stocks represented by the Russell 2000 faced the brunt of the sell-off, plunging 35.53 points to 1.58%. Canada's market mirrored this negative trend. The S&P TSX Composite lost 57.10 points, a 0.23% decline, while the S&P TSX 60 slipped 2.25%, down to 0.15%. These losses may stem from weakness in commodity prices and energy sector stock, which plays a significant role in Canada's market. Latin America market also struggled, while Brazil's Bovespa dropping 1,352.04 points, or 1.12%, reflecting a broad risk of sentiment. Mexico S&P BMV IPC experienced a sharp decline of 430.82 points, a 0.86% drop, indicating caution and the ongoing regional economic concerns also rifting apart the market. Meanwhile, Childs S&P IPSA fell modestly by 0.14%, down 9 points. The sell-off across the Americas points to lingering uncertainties in the global economy. Key factors driving today's losses may include interest rate concerns, weaker than expected economic data, and geopolitical tensions. Despite the pullback, investors are likely to look ahead to earning reports and potential policy adjustment for sign of market stabilization. The commodity market saw steady movement today, with energy and precious metal leading the gain, while the agriculture commodity remained flat. In the energy sector, WTI crude oil rose by 0.38% to $74.53, adding 0.28. Similarly, Brent crude oil saw a modest gain of 0.29%, closing at $77.27. These increases reflect stable demand forecast and geopolitical tensions and controlled supply levels by OPEC plus countries. Natural gas, however, stood out with a sharp 3.10% jump, adding $0.09 to reach $3.13. The significant rise may be attributed to colder weather forecast and increased heating demand, as well as potential supply disruption in key producing regions. In the metal category, gold climbed 0.54%, up $14.50 to settle at $2,679, signaling a flight to safety as global markets uncertainties persist. Similarly, silver gained 0.73%, rising by 0.22 to $30.91, bolstered by industrial demand and investor interest in precious metal as a hedge against inflation. In contrast, agriculture commodities were largely flat. Soybean saw no notable change, closing at $9.97, with a minor 0.03% dip. The stability reflects balanced supply and demand dynamics as the market anticipates upcoming planting and harvest data. Overall, today's commodity market reflect a cautious yet optimistic sentiments. Energy prices remain buoyant and amid the steady global demands, while precious metal attract safe haven investor. Agriculture commodity, however, appear less volatile, signaling relative equilibrium in the sector. The spotlight remain on natural gas, which continues to exhibit sharp movement due to seasonal and geopolitical factors.